Hello, investors. Welcome to this course, Fundamentals of Investment and Trading. And this is the first part of the video course, the online course that would be available on YouTube going forward. This is going to be the introduction. And as I say, the subtitle of this course is Introduction to the Craft of Money Making. So without any hidden agenda, this is what this course is going to be all about. We will be understanding not just investment, but also something that I'm doing for a long time, which is trading. So we'll make the difference clear as we go forward in this course. Before we move any further, let me tell you who I am, why I have the ability, let's say, why I have credentials to teach this course. I am trained as an economist. I'm a financial economist. I've done a PhD in that subject. I have been an investment banker for a long period of time. I've worked with the governments, with the government think tank. I've been an investor for the last 30 plus years. I advise a lot of startups, a lot of companies, medium-sized companies. I've started a lot of companies. Most of them failed. One worked, clicked, which I sold out in 2 years ago. I've worked as a newscaster with radio and television for a while, radio for actually 13 years, television for less than a year. So I'm a journalist also along with all this. And I used to have a band in Osaka. So that's about me in a nutshell. Let's talk about what we're going to cover in this course. So the first thing is you will learn about the basic investment principles, right? So I'm going to be explaining that. Then two forms of analysis. When you think about investment or when you think about trading, you think of analytical tools. And so fundamental and technical analysis are the most common set of tools. These are not two tools, but there are a number of things that come under these two headings, and we're going to cover that. Third thing is I'm going to explain, and that's going to be in the next video session, I'm going to explain you what day trading is and how it differs from investment. Fourthly, I'm going to introduce you the tools and resources that one can use for investment, for understanding investment, and for doing it profitably, right? That's the ultimate goal. Fifth, you will learn what the order types are. So when you invest, what kind of, especially in the stocks and some kind of financial securities, what kind of orders you can place through your brokerage. Sixth, we'll talk about the major signal that tells you if something is profitable or not, and that's called market depth. I'll explain that in detail. And using that, we will try to find profitable trades. So I'll take you through step-by-step process, then also learning how to read charts, right? There are a lot of different charts, but obviously it's impossible to cover them all. There are tens of thousands of different indicators that investors use to make their decisions, traders use. We just want to take a few representative ones. Hopefully that'll help us. Finally, we'll try to wrap our head around some very basic and simple trading strategies and setups. And then finally, we'll talk about risk management along with the trading strategies, because one of the biggest part of investment is controlling your risk, making sure you don't take too much risk, because that is what can let you down. And finally, what I call, so I've said finally 3 times, 9, 10, 11, that obviously shows I've added these 2 points, right, after 9th. So the 11th point is about investment nirvana, which is, it has its philosophical or spiritual undertones. But what it means is by learning to do investment and actually thinking about investment and then going on to do those investment, the most important aspect that will change everything is you realizing who you are. Am I overselling it? I don't think so. I mean, this is what I have always felt. I've been teaching day trading for almost 8 years. I've been day trading for like 11 years. I've been an investor, like I said, for 30 plus years. So day trading, I've started doing it right after Lehman shock, right? And I've been hooked onto it. And I think that it opens, for some of us, it opens up a portal to financial security. For some, it is an essential skill that you would use beyond a career, beyond a company. If you start a company, that's not really what this course, it's about understanding how the market works and making use of that in as an investor, as a trader, as somebody who's a watcher of economy, as somebody who's careful about his finances, right? All this would go under that 11th point, right? 11th point. So all this we will try to cover, not in that sequence, but this is what this course is going to be all about. Welcome to the course. So I have explained you what I am. Let me just go through quickly because I wanted to know the class who is sitting in this course, or not sitting actually, who's spending their time watching this video. So I have, I'm quite glad that you have participated in this pre-course survey on SurveyMonkey. So first thing was overwhelmingly you have suggested you are fine with online. So it's almost like 90%, 85% rather, who are comfortable. And we'll go with the majority, right? Being a democratic setup. So those who are minority, which is about 14%, saying not so comfortable, like I said, there could be real-time sessions. We can do real-time sessions on Zoom, what I call clinics. So if you want to talk to me, please go to the Hoppy of this course, and I'm going to show you. Let me just get out of this and let me try and open Hoppy for you guys. So what you guys can do is you can go to the forum and then pre-course queries, the interested in clinic part, right? So if you click here and if you want to start a new conversation, you can do that as well. So under question and answer, interested in clinic, if you click here, you'll be able to show me your interest. So you can say that you want to have those real-time sessions, and we'll find a time. It may not actually, we'll see how the response is, and accordingly we'll plan that, right? So that's one of the ways. If you don't want on demand, if you want to have a time, where you could, ask me questions, then certainly that's possible in this course, right? So let's come back to the feedback that you've given me. Let's go back to the second part of this thing, which is about what you want to learn in this course, right? And this is important because I customize it accordingly. Your feedback would help me to put more emphasis on things that you're interested in. So two things that you're equally interested. One is to learn about investments. The other is to have general financial literacy. We'll focus on that. The second session is going to be about day trading, because I feel there is a lot of myths about it. There are a lot of misinformation, I would say. And also because day trading has actually grown in the last year, right? 2000, during the lockdown, the young people has flocked to day trading in record numbers, and that has long-term implications. We'll talk about it, but also understanding it helps you also understand your investment. There's a difference. We'll talk about that, right? And the third and fourth questions were kind of similar, and I've got similar response, which shows that 1/3 of you have either studied about investment or you have actually invested in the stock, right? So 1/3 of the class has the basic wherewithal, while 2/3 has no background, and that's where I'll be focusing on, right? So this is the feedback. Thank you for that. Let me explain you what this session, this first session video is going to cover. I've already explained you who I am. Course overview, you got it. Now we'll go and introduce investments. I won't be covering day trading. That's going to be in the next class. So I've already given you the takeaway for the next class. Not exactly class. Let's not call it, right. So it's going to be on demand, as you already know. There'll be course material. These slides would be uploaded on Hoppy in the resource part. Let me show you where it is. So if you go to resources, that's where you'll find the part 1, and part 2 is already uploaded. So you can see this slide over there. And there's going to be 2 weekly assignments, which I'll be clarifying here in the assignments tab. Right now there is nothing, but you will see 2 assignments appearing right after, very shortly. By the time you'll see it, it'll be there. I keep on forgetting that it's on demand. I treat it like a real-time class, which will take me a little bit of getting to know, right? I mean, this is a new format, so I will expect me to fumble, but then I would expect also your patience with me, right? So the things that we are covering in this course, we are looking at the investment basics, the trends, how the participant behavior of you and I, how that helps or doesn't help actually the act of investment, and then day trading, right? So these are 4 keywords, and we will not be covering much of theory. We will be briefly touching theory, and I will bring the wisdom out of the research, academic research, as well as practical knowledge from professionals, and I'll basically try to draw that out to you guys. Learning object is very simple. We want to understand what investments are. We want to also understand how the financial markets work. And then we want to apply that understanding in real time with the world, right? So short quizzes. This is all we will do as we go along. There'll be short quizzes. There'll be weekly discussion forum posts that is expected of you. There'll be online surveys, which you've already participated once, but we will have it as we move along so that I know whether you are on the same page or not. And then there'll be weekly participation in the game. So we'll have an investment game where you will actually try to get yourself comfortable with the world of finance, how investment actually happens, right? So we will do that. Alongside, I'm also proposing, as I already told you, is the clinic where you can, if you want in person with me, if you want to spend real-time sort of interaction, if you want to do that, we will be able to do that as well, right? So the 2 assignments that I have, one is a weekly homework, and that's going to be news. So that's going to be on Hoppy Forum. What this assignment is, every week, it's a weekly assignment. So every week you'll pick one financial news of the week, and you'll post the link of that on the forum. And I'm going to show you where, right? And you will also be explaining the importance of that news there, right? And so it's going to be, if you go to forums, right now, if you look here, so let me open a new forum, and that's called News of the Week, right? So this forum is going right there. I'm making you guys, I'm owner, you are going to be author, which means you can delete your posts. And then I start a new topic on the news of the week. So under this topic, which is going to be from today to next week, right? So today's 11th October, right? So please post before 11th October. You're going to post. So there are 3 things you have to post. You have to post link to news you think is important, right? So that's going to be the first part. The second, to a news item, right? So you place the online link. Right shortly, in a short write why that news is important. So that's like the first part. The second part is write to minimum, at least, I would say, at least 2 comments on other people's post, right? That's all you need to do, right? So if you do that, that's all you need. So 5th to 11th week, every week I'll have a different topic for that week, right? So under this 5th to 11th October, by that time, please upload your news of the week. And in the next class, in the next videos, I'll try to discuss those news and their importance. So this is a graded assignment, which means the quality of your notes. I'm not expecting you to write a lot, but just so I'm going to explain you how that's going to work. So there are simple repeating once again. The assignment number 1, that's about every week you will pick one news related to financial market or some kind of, it could cover anything under the sun, as long as it's connected to finance and economics. Add 1 to 2 lines along with the link where you explain why that news is important. And then you are also supposed to write 2 comments on other students' weekly post, right? So 3 posts a week. That's all you need to do. Simple assignment. And the way I'm going to grade every week as we move forward. So it's simple. The 1 or 2 lines that you're going to write, they will be graded, right? So I want clarity, I want creativity, I want concise, which means it better be short, of course. And if you're putting more than 2 comments every week, then that 10%, extra 10% would go into it, right? So these 3 things would actually cover 30% each, right? So that's first assignment. The second one is about day trading game. I want to invite you to this game. It replicates how real markets work. So the game is called howthemarketworks.com. If you go to howthemarketworks.com and if you have /233412, then you will be able to enter a contest that I've set up for this class, especially for this class. What you have to do is you have to go to How the Market Works. And how does it look like? Let me just try and show that to you so that works. How the market works. It looks like this. What you'll have to do is you'll have to create an account, right? So you go and click on new account, and then you will have to create a login info. And then you will say no here, you're not an instructor, you're a student, you say yes. All you need to do, give a year of birth. You can write anything. You don't need to give your real information. You have to write Japan. And if you want, you can have your email address, but you don't have to. And then a username. And I want you to use your real username so that I can know you're participating in it. And don't worry about this, how much virtual cash you want to have. You don't need, and you can write if you have a brokerage account or not. Brokerage account is an account which you use to invest online, right? And then you agree. Don't click here. You don't need anything. Don't need to click here as well. I'm not a robot, and register, right? It's a simple, straightforward login thing. So once you've made an account, then you log in using your password and the name, login name. And then what you do is you go to the contest and then join contest, right? You go to the join contest, and here, this search bar, which says find a contest, you type here FIT21. So that's Fundamentals of Investment and Trading, FIT21. And then as you click on find, you will see this course, FIT21. There is an explanation. I put what it's going to be all about. You click on join, and you would be joining this course, this game. And so you will need a password. So contest name is FIT21. The password is going to be Jose, H-O-S-E-I, and that'll alternately, once you've made your account, you have the login, you can just go to 233-412 and you can join the contest straight away along with using password Jose. Now there are 3 or 4 basic rules that I have, just to give you an explanation of what this course is all about. You've got $1 million in your account, virtual $1 million. You can use that to invest in real time in the US and Canadian stocks, right? What you need to do for this course in order to fulfill the requirements of this assignment, you have to do minimum 1 trade per week, which means you can buy minimum 1 stock or you can sell it. You can buy one, doesn't mean you can buy 100 stocks or whatever, right? And maximum you can do any. And then you have to, in the class, you are expected to explain what you did. Why did you do what you did, right? That's the very short, maybe not everybody would be asked, because if the class is big, then we don't really, but you can be asked, right? So how it works is you've got $1 million in your account. Every time you buy or sell a stock, it costs $10 commission. And it is, obviously it's a game, so it's not exactly real time. It gets delayed a few minutes. And important thing is you can trade in US or Canadian stocks and mutual funds, which means you will be able to trade on this game in the US market hours, which starts in Japan times at 10:30 in the night. So I would recommend, it'll go a little bit. So when the market opens, that's when you do your trade, if you don't want to stay up late. And so 10:30, that's going to be one problem. But if you get hang of it, the more you are interacting with it, the more interesting it gets, right? So I'm going to explain you other things as the class proceeds, right? So this is the basics of this course, of this assignment. If you have questions, feel free to ask me. I'll be most happy to help you with that. I think the account login and those kind of basic things shouldn't be an issue. If you have going forward, if you have issue, please ask me. Now let's talk about the biggest companies that we have, right? Just to give you a quick snapshot of, that's last year, right? The ranking of the largest companies hasn't changed. So there's Apple, Microsoft, Amazon, Google, Facebook, Alibaba. Alibaba has gone beyond, it's dropped off the top 10 list. Berkshire Hathaway. This is the company belonging to the one of the most famous investor, Warren Buffett. Visa, JP Morgan Chase, two financial companies, then Johnson & Johnson, Walmart. These are usual suspects, right? The ranking is made in terms of market value. So the first thing you have to understand is what market value stands for, right? So market value, what you see here is the market cap. The term that's used is market cap. Market cap is market capitalization. I would please spend some time understanding these terms, basic terms. They will help us. I will also explain going forward what market capitalization means. In Japanese, it's called jikasogaku, if you studied it, which is a product of share price and the number of stocks that are being bought and sold at the market, right, at any point. So that's what it is. Let's have a look at some companies, right? So Yahoo Finance is our go-to place to begin with. Later on, we'll graduate to other sources, online sources. Let's look at the biggest company, right? Apple. So you can just type Apple and it gives you. Apple is the biggest company right now in terms of market capitalization. So it says market capitalization, which essentially is, so it's made up of $2.3 trillion. It's the biggest company right now in the world, right? So what exactly does it stand for? It is a product of share price multiplied by number of stocks, right? Where do I get number of stocks? I can just go to the statistics, right? If I go to statistics, it's going to give me number of stocks. So you should see share statistics. Under that, you find this term share outstanding. Share outstanding are the stocks that are available out, that can be bought and sold, including stock options. What is stock option? Stock option is if I'm working with a company, let's say I'm working with Adobe. And so Adobe gives, as part of my salary, they gave me an option to be remunerated, not just in money as cash, but also stocks of Adobe, right? So they gave me, but all that stock is not, I cannot sell it tomorrow because they're giving it to me as a form of incentive for me not to leave the company. So they say you can't use these options, which essentially means you will own these stocks in the future. You won't be able to have those stocks. You won't be able to sell them for next 2 years, 3 years. That's how they retain talented staff, right? They give them big, large stock options along with their salary, right? So you have an option to choose that. All that, including the stocks that are already available in the market, all that is part of shares outstanding. So this 16.53 billion stocks that Apple has total that's available in the market, if you multiply that with the stock price, which is 139.14, then that's going to give us the market capitalization, right, which is $2.3 trillion, right? If you do this maths, you'll be able to see it. So slowly we'll try to pick these terms in the summary chart of a stock price. Even if you don't have a background, you'll be able to learn those things. So right now we're just focusing on market capitalization, which is called market cap as well. All right, so that's one thing. The other way to rank a company, the largest company, why is it going out? Okay, so this is supposed to be the largest firms. Okay, here it's not. Largest firms could be in terms of revenue. So anytime somebody says the biggest firm, you have to ask whether it's in terms of its share price, which means market value, or is it in terms of revenue. Revenue is simply sales. Anytime you sell a product, multiply that with the price of, so let's say you are selling 100 units of this pen. I have a factory and I make this pen and I'm selling 100 of this in a year. And each pen is costing or priced at 100 yen. So that's going to be 10,000 yen for me, right? That's my revenue. So the biggest companies, and you find this ranking is not the same as the market cap ranking. And so there are companies like Walmart, they would not be the largest ones. And the reason for even though they sell a lot more, right? Walmart sells goods and worth 500, and now even services, right? Because they are in the IT services. They sell $514 billion 2 years ago, right? So for investment purposes, we focus on the market value, not the revenue, right? So I wanted to discuss this. Probably I'll do that in the coming videos. I'm going to talk about news, and I'll pick up the news that you've shared. So I'm not going to do it today. Let's dive straight into the basics of investment so that I can, we are on the same page in terms of what investment stands for. I'm going to talk about the investment and the elements that go into it. There are a few elements. One is time and sacrifice. What it means is by doing investment, I am expecting something in the future. That's the time. So I'm doing sacrifice. I'm not consuming that money that I have right now, and I'm sacrificing for something, a return in the future. And that becomes my cost, right? And the other part of it is it involves risk. There is no guarantee, right? The expectation is benefit in the future. So I've laid out basically the elements. You can define it any way you want, right? So investment is a process by which I'm sacrificing my current consumption for a possible potential benefit in the future, which involves risk. There is no guarantee, right? So because I am sacrificing, I expect my cost to be rewarded. And that cost could be in terms of an interest payment, right? So if you are borrowing from me, for instance, you are borrowing from me, but for me, that could be an investment because I'm getting a return, right? Recurring return. That's an element of investment, but there is risk. You may not pay it back, and that's the risk you run. So that's in general the way you look at. So when you, an important aspect you would have understood is this trade-off, this relationship between risk and return. We all know about the maximum high risk, high return, but you will find investments where there are low risk and you get high return, right? And that should intrigue you. And that's what I'm going to talk about, because those are the sweet spots of the investment and trading, where you can find an asset that's not high risk. So one of the basic fundamental theory in investment talks about efficient pricing. So when we say efficiency in finance, it has a very specific meaning. It's not like efficiency elsewhere, the way we use that term. It's basically informational efficiency, which means everybody, all the participants in the market have access to all the information in real time, right? So there is no unfair distribution of information about the company, about the asset that you want to invest in. So everybody has all the information, two elements. Everybody has all the information. The other is everybody has the ability to understand that information. So there is distributive efficiency, which means information is available to everybody. The other is people do understand what that information means, right? So if markets are really efficient, then there shouldn't be any scope for mispricing. But in reality, we do find there are mispricing, which means the value of the asset is actually high, but somehow it's priced at less than its value. And in that case, it's a right opportunity, it's a ripe opportunity for investment, right? So as an investor, as a trader, we try to find mispriced assets, right? And therefore, in order to say that something is mispriced, we have to understand the basics of how the price gets discovered. Because price is not intrinsic. An asset is not created with a price written all over it. It's not. It constantly changes. The price always changes, and price is dependent on what is called the basics of economics, which is demand and supply, right? So the more demand is, the price goes up if the supply remains the same. So if I were to, and we're going to talk more about it in the coming videos, right, about the pricing. Since I talked a few times about asset, let me try and define that also with the elements, that using the same thing. Because there could be 100 definitions if you're using different textbooks. So I'm going to just focus on the characteristics, right? An asset always will have economic value, right? It has an intrinsic economic value. It has ownership rights. So if I own, an asset cannot exist without an owner, right? It always will be, there will be ownership. And then the third thing is liquidity. What is liquidity? Liquidity is the ability to convert an asset into cash. The quicker, the easier it is to convert an asset into cash, the more liquid it's considered, right? So if I'm looking at my phone, it's not very liquid. If I want to convert that into cash, I'll have to go to a secondhand shop, and there's going to be negotiation. There is no standard to price it. Depending on how long I used, and maybe there's no demand for secondhand phones to begin with. So the price, that means there's no liquidity. As opposed to that, if I have a stock of, say, Apple, right? There's a lot of demand out there. So stocks are highly liquid. As opposed to that, an asset could also be a factory, let's say, big part of a factory, right? And I'm going back to the example of making pen, right? So I have a factory of pen, I've got these huge machineries, but that's an asset for me. It has economic value, I'm owner of it, but it's not very liquid, right? So liquidity could actually differ in an asset. It's hard for me to sell it because not many people want to make pens, right? There's going to be but there is a marketplace for it. So there are some assets that are more liquid, some assets less liquid, right? Liquid. And then among the assets, you can have this rough dichotomy, because if you've studied accounting, there'll be many, many ways to distinguish assets. We don't want to go there. We don't want to look at the accounting. So even if you don't know any accounting, you don't need actually to know a lot of accounting, just need to know basics. Assets can be divided into two categories, as you can see here. And we are focusing on not real assets. So I gave you example of a factory equipment, that's real asset. A real estate, a building, this house is a real asset, right? As opposed to financial assets are an entry into a computer, or it's a piece of paper. In my days when I used to invest, right, long time ago, there was no internet. So there used to be a piece of paper that would be called financial assets. So financial assets give you right over the performance of the real asset. And that's why stocks and those kind of things. There's another term for financial assets, which is called securities, shoken, right? That's the same thing. Financial assets or securities are one and the same thing. This course is going to be predominantly about financial assets or securities, right? So securities, they have no direct contribution. If you have a stock, it does not produce anything. It used to be paper, but now it's virtual asset, right? It doesn't exist in reality. I may own, I don't know, 100 stocks of Apple, but you won't see it. It's on somewhere in the computer, right? Some people call crypto assets as financial assets. That there are different arguments about it, for and against, and we'll probably at some point, depending on your interest, we may talk about crypto assets. Then claims, it is, so if you have a stock, basically if a company, let's say I have, going back to the example of Apple, if I own Apple's 100 stocks, it gives me claim over the income, the profit generated by Apple. So if the income in accounting and finance is same as profit, right? So when we say net income, we are talking about net profit. Net profit is the most important number in an accounting sort of scheme of things. We'll come to that later, right? So if I own, I have claims, but it's not guaranteed, right? And I say also government. So if I have lent my money to the government, so I can buy the government bonds and I can lend them money. That's another way for investment, right? I would not go through this. So like I said, it's going to be mostly financial assets, and financial assets come in three flavors, three variants. One is the fixed income. Fixed income is the fancy way of saying the debt instruments. So I said bonds. Companies borrow from banks, or they borrow by issuing bonds. And bonds are liquid, which means there is a secondary market. I can buy it from, let's say, an issuing company. So when I'm buying a bond, actually, I am lending money to the company, and the company is the borrower. And that bond has a duration. And in that duration, the company is promising to pay me an income stream on a quarterly basis, or twice a year, 6 monthly basis. And that's why by buying a bond, I get fixed income because it's guaranteed. The rate of return may change. The amount of money the company is going to give me, it's based on, it could be fixed rate, right? So they'll give me 5% flat every 6 months. That's a possibility. Or it could be, for example, or it could be, it'll change by the market. As the market interest rates go up and down, my return would be changing, but still it's fixed. I have guaranteed return, right? It will not go zero. It will only go to zero in case that company goes bankrupt. Then I won't get anything. So fixed income is that. It's basically the debt market. Second is equity market, which is the stocks and shares, which is what we're going to do in the game, right? So companies issue equity and they give you ownership, part ownership, right? By issuing those equities. So you become owner. Third is derivatives, which we would not touch because it's really complicated. And I think we need a separate course for that. So derivatives are financial products that whose price is derived from something else. And that's why they're called derivatives, right? So fixed income securities, the markets can be divided into two categories. One is called money market, which is the market for borrowing in the short run. And when we say in finance, short run, it's within a year. That includes treasury bills, which are issued by the US government that have a duration of less than a year. In Japan also, you've got JGBs, Japanese government bonds, and bills. So the bills would be part of money market. So money market is for the short term, capital market is for the long term. And it comes in many, many ways, right? So T-bonds, municipal bonds, junk bonds. We're not spending too much time on this. Equity and the common stock is what we want to understand. So equities are the ownership instruments, right? But there's no guarantee. If you invest, if you buy a stock, there's no guarantee you'll make money. That's what makes it interesting also. There is higher risk, and therefore you get higher return as compared to the fixed income or the debt security or the bonds, right? Bonds pay you less. Your payoff in buying a common stock should be higher, but no guarantee again, right? Because its price of your stock is underpinned by the performance of the firm, right? It depends on the performance of the firm. And by buying a stock, you actually have ownership over real assets. So you actually, if I own one stock of Apple, and there are 16 billion stocks outstanding, I have 1 by 16 billion ownership of Apple by having one stock, right? That's what it means. But it is riskier because in case a company goes bankrupt, then as a stockholder, I lose everything. As a bondholder, if the company has borrowed from me, I may still have hopes of getting a part of my investment because once it goes bankrupt, it goes to a court regulated process, monitored process in which the company's assets are sold. And then the money that is recovered from there, it's given to it goes through a seniority. There's a seniority of debt. So it's distributed to the lenders first. Usually nothing is left by the time the stockholder's turn comes. So it is riskier, and therefore you get a higher return, the potential, not always, right? And derivatives are contract. These are written contract between two parties, and they come also in many, many different flavors. There are, again, tens of thousands of different types of derivatives, but they usually come within these four categories, right? Options, swaps, futures, forward. I would be happy to talk about it if you guys are interested. So let me know in the comments about the Q&A section, so you can ask me a question. You can suggest any of the topics that we are covering in this course as we go along. If there's a particular topic that you find interesting, you can ask me, and I'm gonna be happy to cover it for you. The derivatives are really important market because it allows for risk mitigation from the part of investors, right? Investors who want to balance their bets, it helps you. And we've seen this market explode. The biggest market for financial assets or securities comprises derivatives, even though they are not, it's possible from the stock market to actually participate in them, but the major participants are big institutions and ultra rich, right? So it's kind of not our cup of tea, and that's why we don't want to cover that, right? I would skip the financial innovation part, and we'll cover it as we go forward. I think this is what I want to cover in the introductory session. We will pick from financial and innovation onwards in the next video that I'm going to be uploading. Till then, please stay safe, and I will be uploading more files on the portal, on the Hoppy portal, and I will be also announcing the link for YouTube channel. Obviously, you will know when that announcement comes. You will have that. So this is how we're gonna, I will make available these videos on channel that'll be closed, invitation only channel. And let me know your thoughts about this course, the way it's delivered. So I'll see you in the next video.